I'm the Tax Geek, and here are more of your taxes oversimplified. Today, I'm going to talk about vacation homes. When it comes to your taxes, there are three types of vacation homes. A second home you use entirely for personal purposes, a second home you use entirely for rental purposes, or a second home you use some of the time personally and rent out at other times. The first two types are pretty straightforward. Any vacation home you use entirely for personal purposes is a second home. Just like a first home, you can deduct the mortgage interest and property taxes on a Schedule A if that would benefit you. This would also be subject to any limitations on mortgage interest and property tax deductions. A second home you use entirely for rental purposes is a rental property, even if it is in a vacation spot and is handled just like any other rental property. Click on the playlist above or the link on the end screen to learn all about taxes for landlords. The second home you use personally for some of the time and rent out at other times is still treated like an ordinary rental property, but it is subject to special rules called vacation home rules. This is the first video in a two-part video series on vacation homes and focuses on determining what is considered personal use and what is considered rental use. First of all, just like your primary residence, if you rent out your second home fewer than 15 days in a given year, you needn't report the rent you receive as income. In this case, you are also not allowed to deduct any expenses associated with this income unless they would have ordinarily been deductible, such as mortgage interest and property taxes. If you rent your vacation home for more than 14 days in a year, however, you must record the total number of personal use days and rental use days for the year to properly allocate expenses between the two. For the use of the property to be considered rental use, it must be rented at a fair market rent in an arm's length transaction. Use of the property is considered personal use if the property is used by the owner's family, or any other persons who pay less than the fair market rent in a less than arm's length transaction. For example, if you allow friends of yours to rent your mountain cabin that would normally rent for $125 a day for $25 a day, that use is considered personal use. Differentiating between rental and personal use is important for two reasons. First, we need to allocate expenses between rental and personal use. Expenses allocated to rental use may be deducted from rental income, whereas other expenses cannot. Second, we need to determine if the IRS's vacation home rules apply. If a second home is used personally for more than 14 days, or 10% of the days it is rented, the IRS will apply vacation home rules to the rental activity, which are essentially the following. First, deductible expenses must be apportioned between rental and personal use. And second, expenses associated with the rental activity may only be deducted up to the total fair market rental income. Excess expenses may be carried forward to a future year and deducted against future income. Any excess carryover expenses remaining when the home is sold are lost and cannot be claimed. This is in contrast to an ordinary rental property, where excess expenses can, with limitations, be used to reduce other income in the current year, and if they cannot, are carried forward indefinitely, and if not used while the property is in service, can be used to offset any capital gain on the sale of the property. There are three additional considerations when it comes to determining personal versus rental use. If the property is being used by the owner and the primary purpose of the use is to repair or renovate the home, those days are considered neither personal use nor rental use. If the property is being used simultaneously by the owner and a tenant, those days are considered personal use days when determining whether vacation home rules apply, but rental use days when allocating expenses between rental and personal use. And if the property is used personally for fewer than 14 days, the vacation home rules do not apply, and the property can be treated the same as any other ordinary rental property. However, the expenses must still be allocated between personal and rental uses. The number of personal and rental use days are entered on line 2 of Schedule E. So now that we've determined which days are personal use and which days are rental use, how do we allocate expenses between the two? This question, and several others with regard to vacation homes, will be answered in the next video in this series. Of course, links to resources and additional information can be found in the video description. If you found this video informative, please give it a thumbs up and subscribe for more content. Please share this video with anyone who would find it useful. Please direct any questions, comments, or suggestions to the comment space below, or email me at taxesoversimplified@gmail.com. You can also follow me on Twitter at TaxGeekUSA. Thanks for watching, and I'll be back soon with more of your taxes oversimplified.